Hi, welcome to the bank. What can I help you with today? Yeah, I need a credit card or a loan, I guess. Sure thing. I would love to help you. Let me take a look at your credit first. 1 minute. I'm so sorry. Unfortunately, it doesn't look like you've built any credit, so we are going to be unable to extend a loan or a credit card to you at this time. I know. That's why I need a credit card or a loan so I could build some credit. Well, in order for you to get a loan or a credit card, you would have to have some type of credit built up already. But because you don't have any credit built, we can't extend the loan. I do apologize. Wait, stop. You're telling me that in order to get a loan or a credit card, I need credit. But in order to build my credit, I would have had to have a loan or a credit card to have proved how good my credit is. But I can't get credit if I don't have it. Do you hear what this sounds like? It can't just be me. I know there are so many times when getting a loan or simply just trying to build credit can seem so complicated. But no worries. My name is Mici Rene and I'm here to help you. I have well over a decade's worth of experience working in the banking industry, and my goal is to help everyday people like you and me get a better understanding of their personal finances and what all that entails. So today we are going to be talking about loans and credit. To start off, most financial institutions, including banks and credit unions, will have an array of basic loans that you can choose from. Going over some of those, you have your installment loans, which are going to be loans that are paid back in a certain amount of time and you have a set payment every month. So an example of this would be a car loan, for example, or just a personal loan. Let's say your financial institution gave you a $5,000 loan and you have 3 years to pay it back, and your minimum payment that you have to pay every month is a certain amount. That is an example of an installment loan. You also have revolving lines of credit, which are going to be things like your credit card or a personal line of credit in general. Yes, a credit card and a line of credit are two different things. Now, they are both in the same family. They are both revolving lines of credit and they are both loans. The difference is a credit card, in order to actually withdraw the money from the card to use as cash or to put in your savings or checking account, you have to do this as a cash advance, which typically comes with a fee. So with the line of credit, all you have to do is simply withdraw the money from the line of credit and you can use it as cash, or you can withdraw it and or transfer it to your savings and checking account with no additional fees. Most of the time I see these set up as an overdraft protection. So if with a credit card, if you have a $5,000 limit and you spend $2,000 and interest haven't built up yet, of course, you will only have $3,000 left to spend on that credit card. But as you make those payments back, that money will become available for you to use again and again. This is going to be different from a installment loan because once the installment loan is done, it's over. You can't get that money back. On to credit. Now, what is credit exactly, you might ask? Well, credit is a numerical expression based on a level of analysis of a person's credit files to represent the credit worthiness of an individual based on a credit report. Yes, those were a lot of words that may not mean anything to you, but what it boils down to is credit is your trustworthiness, pretty much. We use credit to see how we can trust people. And I know, don't come for me. I am just the messenger. Depending on who you are, you may say, you know what, that doesn't make sense. I pay my rent on time every month. I pay my utilities on time every month. I don't like using credit because I don't want to spend more than what I don't have and things like that. I get it. I completely understand. I am not in charge of how credit works, okay? I am just the messenger. What that means is, yes, those things can be taken into consideration sometimes, typically on the negative end. So if you're not paying those things, that's when they show up, not necessarily for the positive. So, oh, I pay my rent every month, I pay my utilities and all this stuff. That isn't necessarily going to help you build credit. Now, if you don't do that, yes, it can absolutely ruin your credit. All that boils down to is credit is how we show someone that we're trustworthy. Yes, I have credit. I have a history of being able to pay this back. Think of I say all that to say that credit is pretty much your financial power. It's your ability to borrow money with the understanding that you'll pay it back at a later date. Determining your credit score. So, what makes up your credit score? These 5 elements are going to be it. First off, the biggest one is payment history, which makes up 35% of your credit score. Then you have the amount owed, which makes up another 30% of your credit score. Next is length of credit, which is 15% of your credit score. So that just means how long you've had each line open. Next is going to be new credit, making up 10% of your credit score, which is why sometimes when you open multiple new credit at the same time or in the same period, it can decline your score. And then another 10% is going to be the type of credit. Now, some best practices for your credit is going to be to pay your bills on time, keep your balances low, typically under 30% of your utilization, avoid excessive credit applications, keep an emergency fund, save for purchases, trying to avoid additional debt, of course, order your credit report annually and check it for accuracy. Now, there are ways for you to build credit without you having to go into debt. But before we hop into some of those ways, let me first say thank you for joining me for this video today. And if you are getting any type of value out of this video, please smash that like button down below, but also consider subscribing to my channel. I love teaching people about financial literacy. It is a huge passion of mine. Also, if there's a topic that you all would like for me to cover, please comment below and let me know what that topic is. As I've said before, I've been working in the banking industry for well over a decade now. So if it's basic finance, personal finance related, I am more than willing to help you with that. And also, even if it isn't necessarily basic, but it's something that you just need to know and you can't find anyone to help you, let me know and I would love to be able to be that person to help you with that. Now, the number one way for you to build some credit or rebuild your credit without having to go into debt is going to be a secured loan of some sort. There are multiple types of secured loans. You have your savings secured loan, you have a CD secured loan, and a multitude of variations of those. But pretty much what a secured loan is that you're taking the money that you already had and you're giving it to the financial institution that's going to then give it back to you for you to use to purchase things. So what it is it's a risk-free way of having credit, but it's not really credit because it's already yours. But the more you pay it back, the more it actually builds your credit. So they are going to actually be reporting this to the credit bureau. And that's also something that you want to keep in mind. Like there's lots of places that say, oh, we have a savings secured loan and you can do it this way or whatever, but you want to make sure that they actually report to the credit bureaus because there are some places that say that they do that, but they don't. They only report in a negative sense.